All right. I'm going to give everybody a couple of minutes to log in, get situated, grab yourself some water before we get started. Welcome, everybody. Thanks again for joining us. Looks like we've got some familiar names logging in. Just a few minutes and we will start the presentation. Okay. About one more minute and we will get rock and rolling. Seeing a lot of familiar names. Welcome back, everybody who's joined us before. For those of you who are new, welcome. Okay, looks like we're pretty set. So we're going to go ahead and get started. Hello, everybody, and welcome to ERP Fixers Ask a Fixer webcast for September. Today, we are presenting with John Jordan, and we will be discussing variance analysis in SAP S/4HANA. Before we get into the presentation, I just want to discuss briefly how this is going to go. We will be having a live Q&A session at the end of this discussion. So if you guys can hang on until the end, we will have John answer all of your questions. We will be posting the recording of this presentation as well as the answers to any questions that were asked during this presentation on our website a week from today. For those of you who are registered, you will get an email next week with the link to that. So you'll have everything you need to watch the presentation in case you can't stay for the entire. So let's get started. John, next slide, please.
All right.
So what is ERP Fixers? We connect you with SAP experts to obtain quality immediate solutions for your SAP system. We consist of thousands of SAP freelancers in all facets of the globe and all SAP modules who are ready to help and assist with their knowledge in SAP. We offer an online platform, SAP Optimization Assessment, Material Ledger, S/4HANA Transitional Roadmap, and Cost Transparency Reports. If you'd like more information, please visit our website at erpfixers.com. Next slide, please. Today, we have John Jordan joining us. He is the founder of ERP Corp. ERP Corp delivers expert SAP consulting and training. He is also the author of 3 SAP press books, including Production Variance Analysis and SAP S/4HANA, which will be published in January 2023. So keep a lookout for that because that's coming up here pretty soon. This webcast is also the launch for the SAP Controlling Conference, which is in October, live in San Diego, California. If you visit the website controlling.erpcorp.com, you can register and make sure you get on it and register for the early bird special to save $400. For those of you who want the registration early bird code, please shoot me a message in the chat and I will go ahead and get that over to you guys. You can also send us an email at info@erpfixers.com. Really quickly, for the questions that will be answered at the end of the webcast, if you could please submit any of your questions into the chat box or the Q&A box at the bottom of your screen. I'll be collecting any of your questions throughout the presentation, and then we'll ask them at the end. Okay, next slide, please. Awesome. John, thank you so much for joining us again today. It's always a pleasure for having you, and we look forward to a great discussion today. I'll hand it over.
Absolutely. Okay. Thanks, Jessica. Thanks for that amazing introduction. I appreciate it. It's always a pleasure to do a webinar with ERP Fixers and yourself and Paul Avagil. I like your contribution to the SAP community, and I believe you have a webinar every month, and those recordings are available on erpfixers.com. That's a valuable source of information right there, and I refer to it regularly. So let's get started. If you have any questions or comments, please post them in the chat for all to see at any time during the webinar, and Jessica will keep track of that, and she'll let me know, and or we'll discuss them at the end of the webinar. So let's get that process started. Everyone in the chat, just type what city you're in for all to see, and Jessica will let us know the range of countries that we're seeing. I think it's quite an international audience today. So go ahead and put that city in the chat. I don't get to see it because I'm presenting, but Jessica will be able to, oh, hold on, maybe I do.
Looks like we have one so far, Abu Dhabi.
All right. Yes, I can see that. So don't be shy. Post the city you're in for all to see. There we go. Another India. Good. That's fun.
Nice.
Atlanta. Go ahead. How many roundabout do we have on the webinar today, Jessica, do you think?
It looks like we've got about 42 attendees.
Nice. So we've got a few more cities to come, guys. Go ahead. One more and we'll proceed. Just one. There we go. We got Waterloo, Canada. Thank you. So just to get used to the process, it gets you involved, and if you're involved, you will remember more. Awesome. Let me minimize that and that. So if you're new to variance analysis, the chat help you remember and they get you involved. And if you're advanced, you help others learn and help you to remember. So why do I like variance analysis? I like it because there's a wide variety of situations and I learn something new every time I'm in a new situation. So the next question is, what is variance analysis? So when I made the title of this webinar and it said variance analysis, I wonder how many people are really interested in it and register, but some people have no idea what it is and want to register to find that out. So in your chat, why don't you type in new or advanced, or I think we might even have a poll. No, we don't have a poll yet. Just in your chat, just type in new or advanced or mid-level and see what happens. Don't be shy. Okay. We're not getting any yet. Maybe people don't want other people to know their level, and that's okay.
Someone who is, I've got a couple, if you scroll down, John, we've got mid-level, advanced.
I don't see it. You tell us what we're doing.
So far, we've got 2 mid-level, we've got a couple that are advanced. So quite a few advanced so far.
All right. So excellent. So we've got a wide level of levels in the audience, which is what I expected. If you have a question after today, just email me on jjordan@erpcoop.com, and let's close that up. Okay, let's go to the next slide anyway. Got the introduction over. How do I know SAP variance analysis in S/4HANA? That's a good question. Well, the answer is I'm writing a 3rd edition of my book with Janet Salmon, which previously was in ECC. In this 3rd edition, it is in S/4HANA. So Janet Salmon works for SAP in Waldorf. So I've been writing, and she's been commenting on, so you need to do some research on this blog or in this SAP note, and she lets me know what those notes are, and I research it, and I write some more. So it's working very well, and it's actually fun. So that's how I'm learning it. So how can you learn SAP variance analysis in S/4HANA? You can attend webcasts like the one today and take notes. You can read blogs and books, use Google, whatever the topic is, like variance categories or margin analysis, just Google it and research it and read the material you'll find on topics that interest you. Research it and write about it and ask questions. what I'd like to do now, Jessica, is run a poll on who is actually on S4HANA. If you can, we haven't done a poll before, so there we go. So if you can answer that poll and give us an idea who's on S4HANA or not, and then we'll proceed with the webinar. Let's give that a couple of minutes, and I'll proceed while we're getting those answers. So today, go ahead.
While we're collecting those answers, I just wanted to let everybody know that the chat is now active. So you should be able to provide your questions and answers in the chat and the Q&A box as well now.
Right, Vikram from India. I've joined from Mumbai. Nice. I like to see the international audience. So thanks, Jessica. Keep us posted if you get some more. We're going to talk about the basics of variance analysis. What is variance analysis? That's a good question. We're going to go straight into that. And then we're going to discuss what's new in S4HANA. It's an important topic. So you can use that in other areas other than variance analysis. We'll discuss cost objects in S4HANA, cost estimates, variance categories. So we'll review the basics in ECC and then move quickly on to what's happening in S4HANA. So let's proceed then. Cost objects. There we go. So cost objects in S4HANA, what's happening with them? So in S4HANA, the Universal Journal receives all postings from financial accounting and controlling. And in fact, SAP is merging S4HANA merges financial accounting and controlling. So we've got the results of the poll. So the 65%, that's a good number on S4HANA, and no, 35%. So there's a good mix. Let's close that and let's proceed. So cost objects still apply in S4HANA. Now the difference is that when it posts to the Universal Journal, the cost objects post to the Universal Journal as well. They were always independent before. But what is a cost object then? Let's proceed with that. Let's take a typical cost object of a production order. It receives debits and credits. And those debits are typically materials, goods issued to the production order. There's activities. Activity costs come from confirmations to the production order from the production line. And we have overhead costs. And you might, those concepts might sound familiar because they're cost components. They're the basic cost components. Materials, activities, and overheads. And it's crucial that you remember those as the basic cost components that come up all the time in product costing. You need to remember that. And they debit the production order on the actual side. The credit comes from the goods receipt. When you manufacture the item, put it into the goods receipt, you get a credit at the standard cost of that finished good. So the question is, how can we have a difference between the debits to the production order and the credits from the goods receipt? And that's what we're going to talk about more today. Excuse me. The difference we'll explain with variance categories, and of course we'll talk about those, but let's delve a bit more into the actual debits and the actual debits. What are they? Okay, before that, we'll delve into S4HANA a little more. We discussed most people are on S4HANA. That's great news. So this will be a revision for all the people on S4HANA, I hope, and it'll be learning for the others. With the Universal Journal and SAP S4HANA, SAP is progressively merging controlling and financial accounting, and you will hear more about that as that progression happens. In the Universal Journal, all postings occur at the same time in the one table. That's the basic concept of S/4HANA, and that's the biggest advantage. In the table, the universal table, ACDOCA is actuals and ACDOC-P is planning. In general, they're the planning entries. The postings include cost objects. They can be production orders, they can be cost centers, they can, well, we can also have accounts, and those, we know that those accounts can be GL accounts in the variance split, which can represent production variances in margin analysis. And we'll talk more about that in just a minute. No reconciliation is required because all the postings happen into the one table. Now let's talk about cost estimates. They're integral in variance analysis, but how? Variance analysis starts the year before. If we're analyzing variances today, we started the process last year with a costing run that pulls in a lot of planning data from sales and production, what everybody forecasts they will produce this year today. So we're analyzing the actual data today from the planning data last year. We can create cost estimates today, but the standard cost estimates for that credit on the production order were created in the costing run probably on January 1st this year. So cost estimates plan for cost components. The BOM introduces purchase materials to the production order. The activities introduce confirmed activities that occur at work centers, and overhead is calculated with costing sheets. In general, you can do overhead in other ways, but costing sheets is probably the most common. Can I just ask in the chat, who uses costing sheets that you know of, or some other way? Okay, we've got a question there that I can't answer right now, but if you can say yes or no to costing sheets, let's we use costing sheets. There we go. Nope. And there's going to be a range. Limited base is good. So there's a wide variety. Costing sheets is one way of introducing overhead to cost. There's other ways. There's template application. There you go. So that's exactly what I expected. So that's really good information. Thanks everybody for participating. So generally generally cost will always be goods issued to the production order from the BOM. We'll discuss that a bit more. Generally, activities are always from confirmations on routings at work centers. There can be a variety of different ways of introducing overhead because there's different types of overhead, and we'll talk more about that. Thanks for your chats, your participation. So there it is again. The BOM is a material cost, routing is the activity costs, costing sheet is the overhead costs. And you notice that they're the three main cost components. And I've got a colored diagram here of the BOM. The third is the top level assembly. Sub-assemblies are held, that's the material type. And material type, ROH, is generally the raw materials, which you assemble together with at work centers with activities to create sub-assemblies, and then eventually the manufacturing good. Got a diagram of routing here. It's a series of work centers, operations performed at work centers, and here's an example down the bottom in color. Now, those costs that I just talked about are the cost estimate costs. The cost estimate goes in, we create a cost estimate for an assembly, in this case, P100. The cost estimate goes straight to the bottom of the BOM, creates cost estimates for all the raw materials, and then pulls it up to the next level, a sub-assembly, and calculates the cost estimates for the sub-assemblies. And now we're introducing activity cost to the raw material costs, and then they get gathered up into the finished good. And at the end of this cost estimate, when we save it and release it, we have the planned cost for that finished good in the cost estimate. So when we release the cost estimate for the finished good P100, we are getting ready for the goods receipts from the production orders that manufacture the finished goods. When we do the goods receipts, we get the credits from that standard cost estimate on the production order. So let's discuss that a bit more. So the next logical step is we've got the planned costs on the production order, or at least the planned credits from the goods receipt. The next stage is we introduce actual costs to the production order. We create the production order. And the first thing we do when we create the production order for a material and plant is we copy the master data to that production order, which happens to be exactly the same BOM and routing and costing sheet are all copied to that production order. So theoretically, when we post the actual costs to the production order and compare them to the planned costs, they should be the same. The question is, what if they're not? So we collect the actual costs against the production order. When we issue goods, we can issue raw materials, we can issue sub-assemblies. They're actual, and those costs are identified as the material cost component. When we confirm activities on the routing at the work centers, those costs are identified in S/4HANA by the account associated with those activities. And the other thing to note, in the first cost component, those postings are identified with a GL account, which has a cost estimate embedded in it. That's is the new procedure for S/4HANA. There's no separate cost elements. It's part of the GL accounts, as I'm sure everybody with S/4HANA is very aware of that because you've had to set it up. So let's go. So that's it. We've talked about the planned costs, the actual costs. So we just discussed that the cost estimate and the actual costs, which came from the material, from the master data copied to the production order, they should be the same. And variance analysis explains the difference. If there is a difference, then there'll generally be always a difference. So that's what we're talking about today. Any questions on any of that? I did have a question, Jessica. Somebody in the chat put, we'd like people to stop changing our data in SAP. Can you remind me what that question was?
Yes, let me see. I've got
a few chats. While you're doing that, I'll go to the next slide.
Okay.
It was a good question, I think. So the next topic is variance categories in S/4HANA. So now we know what variances are. It's the difference between the planned costs from the cost estimate and the actual costs that are posted to the production order from goods issues, from activity confirmations, and from overhead postings. So SAP allows us to analyze the difference with variance categories. Now, let's talk about that. What does it mean in COPA in S/4HANA? At the end of the day, we want to map these differences to profitability analysis, because these differences allow us to get the total cost of manufacture, and therefore when we sell to the customer, we can get an accurate profitability for each material in each plant, for each finished assembly in each plant, which is one of the main goals of this exercise, is to get the variances into COPA. The other goal is to analyze the variances on the production line, so manufacturing can improve their efficiency. So in S/4HANA, there are still costing-based COPA available where we map conditions to value fields. In S/4HANA, we now have, well, before we do that, let's talk about in S/4HANA, we can also have we now have account-based COPA, which is now called margin analysis. So in margin analysis is available to access the Universal Journal. So it takes full advantage of SAP S/4HANA, and that's what the focus of SAP development is focused on margin analysis. And their expectation is that we will all eventually use margin analysis. We're not there yet, but that's the goal. Can we do a quick poll, Jessica? Who's on margin analysis? And while Jessica's setting that up, I'll continue. In S/4HANA, you can have both costing-based COPA and margin analysis. Margin analysis is based on the Universal Journal. We've got more information going to the Universal Journal, and we can access that taking full advantage of Fiori apps. And we'll have a look at some of those apps in a little while. So in S/4HANA, margin analysis is preferable to costing-based COPA. Having said that, there will still be some customers using costing-based COPA in S/4HANA. And the typical scenario is if they transformed from ECC to S/4HANA, they might have felt more comfortable migrating their costing-based COPA, use that until they're comfortable with margin analysis, and then swing over to margin analysis, maybe. I think that's a typical scenario. We've got a poll, so let's minimize that and continue. So we've got a wide variety of situations out there. Some people are on ECC, so they will be using costing-based COPA and maybe also using account-based COPA. The people on S/4HANA may be on costing-based COPA and both margin analysis and all the different combinations of those. Let's continue. So now let's talk a bit more about production variances in S/4HANA. You map variances to value fields in costing-based COPA with the PA transfer structure, transaction KEI1. That's in ECC and also in S/4HANA. Now you might do both that and create the splitting profile for margin analysis in S/4HANA. The other purpose of creating the splitting profile in S/4HANA is the settlement of the production variances to GL accounts. So it's two purposes. You're doing both with the one. Okay, we've got a result on margin analysis. Wow, we've got 50% on margin analysis. That's great. And no is 43%, unshort 10%. That's a great result. Thanks, everybody. I like it. Thanks, Jessica. This is working well. We'll have to do it in future. I told Jessica 5 minutes before this presentation that let's try polls, and she said sure, and they're working. Thanks, Jessica. So what's new with S/4HANA is you need to create the GL accounts that you're going to use in the splitting profile, and for the cost of goods split, you'll have a few more GL accounts there, and you'll map them, the variances, to the splitting profile with this menu path down the bottom. In the IMG, you can read it. It's very straightforward, but you do need to know that menu path. So you do it's simplifying it in that you do with that splitting profile. You're settling the production variances to financial accounts, and you can also report on them in margin analysis. Makes sense. So now we've talked about S4HANA, I thought we might go back into variances basics, because ECC or S4HANA, we're still going to have the same variances, because we're comparing the cost estimate costs with the actual cost to production order. We're still getting the same variance no matter which system we're in. So let's have a quick review of the variances, and everybody should know these. So when I ask questions, we'll get a good result, I'm sure. Input price variance, how can that happen? It occurs when the component price changes after the high level cost estimate is released. And generally, you don't want this to happen. Generally, when you're creating cost estimates after the main costing run, you use transfer control to transfer the existing cost estimates from the raw materials and sub-assemblies. You don't have to, but generally, it's probably what you want to happen to minimize this input price variance if you're using standard price. And generally, I recommend standard price for every material. Now, having said that, some companies use moving average price on the components, probably more so in Europe, not necessarily. There's a wide variety of practices here. So if you're using moving average price on your raw materials, you will have an input price variance. When you create another cost estimate during the year on your high level assemblies, you might, yeah. Can I ask another quick poll, Jessica? Who uses transfer control?
We'll get that set up now. Transfer control.
Transfer control.
Okay.
To minimize the input price variance. Let's do a quick poll. When you get that created, we'll carry on. Okay. The next example of well, there's an example of input price variance, and we just discussed that. A component is valued at $10 in the costing run on the 1st of January. The price subsequently changes somehow. We use transfer control to try and minimize that. Let's move on to the next one. Resource usage variance. This is very common. Thanks, Jessica. Let's minimize that. For transfer control, who uses it? Who knows what it is? Who doesn't know what it is? It's to use existing lower level cost estimates, so you don't recreate them. You don't necessarily need to create a new cost estimate for the components, but you need to create a new cost estimate for the higher level material. Resource usage variance is when you substitute components, which is different from using more of a component than planned. When you use another component from the component that was planned, is resource usage variance. It happens a lot. So the way that SAP knows, if you've got a material number in the cost estimate or in the planned cost on the production order, if there's an actual quantity, and then if there's an actual quantity on the cost estimate, then there's an actual quantity of 0 on the production order. SAP knows that we substitute another part, and it can calculate very easily what that resource usage variance. So this is great. This is amazing. We've got well, we've got about 30% use transfer control and therefore know what it is, and about 50% don't use it and therefore know what it is, and 30% not sure. That's great. That's a great result. Thanks, guys. A lot of people know what transfer control is. That's great. It's not a difficult concept. It just sounds complicated, but it's not. Here's an example of the resource usage variance. You issue cost component A, you issue component A $10 to production order, but component B at $15 is issued instead. I think that $10 was meant to be, yeah, you plan to issue with that. That's all it is. So the SAP calculates the resource usage variance by adding the two together. Input quantity variance, fairly straightforward. You plan to use a quantity and used a different quantity. You might have lost some components on the way to the production line. They might be faulty. You might have to issue more, and you analyze the variances to help you investigate where to look for that. It can happen with both materials and activities. You could plan to have 10 minutes of a resource and use 12 minutes. So you use more resources than you planned. You have to figure out, why are we spending more time assembling this this sub-assembly than we planned? What's going on? So you know where to look. The other variation of that is that input quantity variance can also represent component scrap variance. I won't go into that, but you can read about it. It's pretty straightforward. And if anybody wants to know any more about that, just put something in the chat. If you see something in the chat, Jessica, while I'm talking, let me know if it's relevant to what we're discussing at the time. If not, we'll discuss it at the end of the presentation, no problem. Okay, the remaining input variance is everything else on the input side. It's that simple. Or, yeah, so there's if overhead changes, there can be different reasons for that. Then there's 4 output variances. So that's on the output side of the production order. There can be an output price variance. It's a little bit more complicated and less common than on the input side. And you can read through this text here. It's a bit more technical. Lot size variance is very common. So you create a cost estimate based on a costing lot size. And if you're creating a costing run, it defaults that costing lot size from the material master. So that's a very important field to have set up correctly on the material master, because most of your cost estimates are going to come from the costing run. So how do you know what to set the costing lot size? And I've had some postings on my LinkedIn posts about variances, people wondering how they can't set the costing lot size and exactly what they want. There's a relationship between the costing lot size and the price unit. So the costing lot size should be about the size of the production order that you used to buy the components, or the size, the lot size of the production order that you used to manufacture and assembly. If you base the cost estimate on costing lot size of, say, 100, and you start manufacturing 10 of them, you're going to have a lot of this variance, because it's much more inefficient to create 10 of something than 100 of something, obviously. And the same on the purchasing side. Vendors generally give you a price break if you order 1,000 of something than if you order 100 of something. And there's a relationship between the purchasing quantity and your production order quantity. Obviously, you're purchasing more of the components for production orders with larger lot sizes. Okay, let's move on. Mixed price variance, I'm going to skip over. It's using cost estimates, mixed cost estimates. You're taking cost estimates and mixing them together, mainly to influence your inventory quantity, your inventory value, mainly for mining companies, and something unusual. It can be common in some industries. Remaining variances, again, they get assigned if you don't know what else they could be. Okay, let's move on to period end processing. This is the variance calculation initial screen. You're just choosing a plant and you're choosing production orders or cost collectors that you're going to calculate variance on. So we all know the status of production orders, right? You can only create variance on a production order if it's complete, if it's fully delivered or technically complete, that cancels WIP and allows us to calculate variance. I'm sure everybody on this call knows that. We've got variance results. After we calculate the variance, we can have messages. We should analyze the variances to see what's going on. That doesn't go away with S/4HANA. We still got to calculate the variances. It might happen more quickly, but you still got to take action. Yeah, we've got errors, warnings, and information messages. Fine. So let's get on to S/4HANA. We discussed with the margin analysis, you map variances to separate GL accounts in the splitting profile. The menu path for the splitting profile is here. It's fairly straightforward. You just have to create the new GL accounts for the variances instead of creating the value fields and costing-based COPA. It's the equivalent of it. So we hear a lot about Fiori. What is it? Jessica, can we have a poll who uses Fiori apps? I think there'll be quite a few because we've got quite a few on S/4HANA and quite a few use margin analysis. So I'm suspecting we'll get a high percentage. So what is Fiori? It's a web-based interface that SAP developed, I don't know what, 10 years ago, that you can use in place of the SAP GUI. There's advantages to Fiori, especially on margin analysis, because you can then access the universal journal and there's more information in the universal journal. Thanks, Jessica. That looks great. Thank you. And there's lots of Fiori apps, and I can't possibly describe them all, but I can tell you the two new Fiori apps that improve variance analysis a lot. The first one is production cost analysis. There's the identifier, and that's to replace the SAP GUI order selection reports. You might know or remember, it just lists a whole lot of production orders. And in the columns, you have you can have cost, you can have variances in the columns, and you can have other cost information in the columns. So it's kind of a summarize. It's not a summarize, but you can list many orders, and you can sum them. The other Fiori app that you need to use if you're not using it already is the Analyze by Work Center Operation app. So in ECC, we didn't have access to the work center and the operation, but those now post to the universal journal. Okay, we've got a result. Yeah, that's what I thought. Over 50% use Fiori apps. That's exactly what I expected, and slightly less don't. So, and 2% not sure. That's fine, but that's a surprisingly high. It's a good number that people are using and taking advantage of Fiori apps. Thanks everybody for sharing that information. And I'm sure everybody that's using Fiori apps, if you're on this call, you're probably familiar with these two apps that are very useful. There are many other apps, by the way. Don't think these are the only two apps for variance. There's lots of really cool apps out there they should search for and take advantage of. Let's see if I can move to the next slide. there's just a bit more information on those two apps. So basically, Fiori apps can give us more information because they're based on the Universal Journal. There's more information in there. There's cost objects and work center and operation that we couldn't have reported with a standard report before. I'm sure everybody's seen this. This is just the first screen that you see when you're using the production cost analysis app. Jessica, can we do a quick poll? Who is using these two apps? Just say these two Fiori apps in the presentation. I'd be interested to see how well they're known. The first one, you can display orders with these costs in the columns, just like we could before. We've got a few more options there down the bottom. You can group costs. The second app, analyze costs per work center operation. This just gives you a feel for the screen that comes up, gives you a feel for how the information is displayed, and there's lots of different filters. Yes, that's perfect. These two Fiori apps that we're discussing right now. Thanks, Jessica. I suspect there'll be a lot. I'm hoping there'll be a lot. We're getting towards the end of this presentation. I hope you found it useful. And for most people, this is a very wide variety of audience, beginners to advanced. So that's always a challenge for me. So if you're a beginner, if you see information that's interesting, go ahead and research it, ask questions, look for blogs, look for SAP notes. Send me an email if you, I think I have my email in here. There's my email at the bottom. It's on the presentation. There's the poll. Oh, that's interesting. Well, there's 64% are not using those two Fiori apps. Well, I'd recommend, if you're not, investigate them. And if you're not sure what's going on, send me an email. They're worth looking at if you're not using, and you're using margin analysis. So I'm running an SAP controlling conference in San Diego in October 10th, 11th, and lots of reasons to attend: networking, meet expert speakers. We've got many presenters at ERP Fixers, webcast, are presenters at the conference. Paul Abergel, Rogerio, Marjorie Wright, Tom King, and others. Interactive sessions, learn SAP best practices, and keep up with the latest on S/4HANA. I've got a membership on ERP Corp that you can review recordings of past conference sessions. You can find out more information on erpcorp.com. You can email me on jjordan@erpcorp.com. We are at the end of the formal part of this presentation, and maybe we can use some of this time to review questions in the chat and Q&A. Jessica, I'll hand it over to you now if that works.
Yep. Thank you, John. That was love the polls. That worked out great.
Perfect. Yeah, we should do that more.
We should. That worked out great, and we've got the results too. So I'll send those over to you. We have a ton of questions here. I don't have time to get all of them today. For those of you who joined a little late, we will be posting the questions with the answers, as well as the recording of this presentation, on our website a week from today. Everybody that is registered will be receiving an email next week with a direct link to where this information will be found. So if we don't get to your questions today, we will get them to them next week, and we'll have those answered for you. Hold on, I've got one more question that popped up. I just want to make sure that I have this recorded so we can get these posted. Okay, perfect. So the first question is, my question is in different variants. Is there a way to stop users to use material variance? The objective is I do not want to resource usage variances.
Oh, you mean, I wonder if they're saying, can I stop users substituting materials? Can you just read that one more time and I'll have another shot at it?
Sure. My question is in different variants. Is there a way to stop users to use material variance? The objective is I do not want resource usage variances.
Well, resource usage variances come from substitutions. So you can't really stop production from substituting components. They need to keep production going. So I think if you want more in-depth answer on that question, just shoot me an email. So what's the next one, Jessica?
The next question is, can we allocate some costs like the machine depreciation costs back to the production orders that have been used in this machine?
Wow, good question. And I can't think of an answer off the top of my head, but again, send me an email with that question and I will send the answer to you and to Jessica so that she can publish those answers on the recordings. Next question.
Next question is, how do we apply the actual overhead on raw material if the cost sheet is attached to the semi-finished and finished product?
Yeah, these are very good questions. You can, there is a standard way, and I can't recall off the top of my head the details. So again, send me an email and I will answer it personally and send the answer to Jessica. Next question.
With the actual costing activated, do we still need variance splits?
Wow, I believe so. These are great questions. I believe so. I'll have to confirm that again, unless somebody's got an answer and they can put it in the chat. A lot of people are on margin analysis here, but I believe you still need the variance split because you need to assign the categories to GL accounts and the margin analysis. The actual, I think they said actual cost component split, that's something different. So the answer is yes, you will still need the variance. They are different concepts and you will still need the variance split, I believe. Next question.
Can we use the ML actual costing while the RM is moving average and SFG and FG are having standard cost?
Still good questions. That's actually a good question. In general, to use actual cost, everything needs to be standard. Absolutely for the finished good and the semi-finished good, but I'll have to check if you are allowed to have the raw materials at moving average. I don't think so. I think everything needs to be at standard so that SAP can post it. No, actually everything needs to be at standard. So SAP needs to record all the differences and then post them to the right place when it's calculating the actual cost. Next question.
Okay, please scroll up. Why do variances raise when plan and actuals are from the same data?
What is the question? Why are there variances if plan and actual from the same data?
Yes, why variances raise when plan and actuals are from the same data?
That's the question. That's what this whole webinar is about. We're analyzing that difference. How did they happen? And that's and you analyze those variance categories to try and figure out what's going on and try and improve your production variances. Next question.
What is the difference between planned cost and target cost in the order, and how does it affect the order?
Great question. So planned costs don't change with the operating rate. So if you plan to produce 100 or something, and the plan costs are $1,000, the plan costs stay the same no matter what. But if you've produced 500 of the planned 1,000 quantity, your target cost will be 50% of the planned cost, and any variations of those percentages. So the target costs vary with the operating rate, and in fact, you have to have target costs to be able to allow SAP to calculate variances. It's a mandatory requirement of calculating variances. Next question.
Okay, I have somebody that's specifically requesting for us to answer their question. Let me just go back. So in an MTO scenario, how do we flow the variance to COPA before settling the sales order?
Okay, that's a detailed question. MTO is make to order. How do we get the information to, I think, margin analysis before finishing the sales order? I think they said it's one I can't answer here, but again, send me an email and we'll get the answer to that on the website. Jessica, next question.
Okay, how do I use plan price 1 and cost estimate of the subcontract products where special procurement key is used?
All right. So in the valuation variant, there's various tabs. And the first tab is the material valuation, which generally you would set it to look at the plan price 1 to get the cost for the purchased material. But there's a separate subcontract tab. You'd have a look in the search strategy in that tab to see what's there. Is there plan price 1 or plan price 2 and 3? So you just have to look at that tab in the valuation variant for subcontracting. I think that answers that question. I think there was another part to that which I'm not going to answer right now. Next question.
So the person who asked about the last question, the MTO scenario.
Yes, all right.
No. How do we clarify our doubts with regards to product costing? To which email ID should we send the email?
You can send it to jjordan@erpcorp.com and I'll either answer it or direct you to the right resource.
Okay, let's see. Just trying to make sure I get everybody's questions reported. Yes.
We got a couple of minutes. Well, 2 actually.
2 minutes left with questions in.
Sure.
Hey, John, I've just started in CO. I'd be very interested to know, should I get Hub or opt for a formal training program to be able to be job ready?
Well, I think if you go back to the first couple of slides, I said I recommend taking notes during this webinar. Find areas that interest you and investigate those areas. The short answer is it's not possible to learn everything in control. You've got to pick and choose. So if you find some of those areas, research them, Google them, find blogs, find SAP notes and research it. If you've got access to an SAP system, all the better. But there is no simple answer to learn controlling. It takes a lot of work and you have to choose the area you want to specialize in. Next question.
Last question is, may we know what are the Fiori apps for MTO based product costing?
That's a good question. And I'd Google it. If you ask me, I would Google it. There's a lot of apps out there and you need to find them. I'm certain there are, and there's some amazing apps out there, but just look for them. And just as I would do to answer the question, and I'll help you do that. So, wow, we are right at time, Jessica. That was perfect timing.
Perfect.
Thanks everybody for attending. I'm glad there's so many people interested in variance analysis, and it's I feel it was a good session. But please, did I mention that there's a JJ 200 gets you $200 off the Control and Conference in San Diego. October 10th, 11th at JJ 200. Registered during September, and you'll save another $400. So over to you, Jessica.
Great. Awesome. Thank you so much today, John. Everybody that participated with today's polls and everybody who listened in, we appreciate your time today. And thank you so much. Again, we will be shooting out an email next week, and we'll have all of your answers and questions posted. Thanks, John. We appreciate your time as always.
You're welcome. Thank you.
For those who are asking about how we can find the recording will be posted with the Q&A on our website at erpfixers.com a week from today. You will get an email with a direct link for this since you registered.
Awesome.
Awesome.
Thanks, Jessica.
Thank you so much, everybody. Have a great weekend.
You too.